はい、皆様、それではですね、お時間も過ぎましたので、始めていきたいと思います。で、本日はお忙しい中、お集まりいただきましてありがとうございます。JICA およびインパクト志向金融宣言による、新興市場による革新的なプライベートデッドとフィンテックインパクト投資ということで、本日、セミナーとウェビナーの方を開催したいと思います。まず最初に、私ですね。はい、私、インパクト志向金融宣言で事務局をしております、小笠原と申します。そうですね。この度はですね、JICA さんの方に、こういう面白い取り組みをされている、方がいらっしゃるということで、ご案内いただきまして、JICA さんと協力してですね、このようなセミナーを開くことができました。今日、非常に、通常、プライベートエクイティでやっておられるような方が多いような気がするんですけれども、デッドの、しかもフィンテックということでですね、非常に私自身も、お話を楽しみにしております。インパクト志向金融宣言については多分皆さんご存知だと思うので、あまりご説明はいたしませんが、我々、今ですね、74社署名をしていただいております、日本の金融機関によるですね、プラットフォームですね、非営利のプラットフォームということで活動しておりまして、設立からちょうどこの11月で4年目に入りました。皆さんですね、金融機関が集まって、いかにインパクト投資を量を増やしていけるか、それから質を高めていけるかというようなことを議論をしたり、またこういう形でセミナーをしてですね、いろいろ情報発信などをしているプラットフォームでございます。はい。では、私のお話はこれくらいにいたしまして、まずですね、アルマのご紹介ということで、平田さんで、JICA のですね、上級審議役をされていらっしゃいます、平田さんからご紹介をいただければと思います。では、よろしくお願いします。
皆様本日はご参加いただきまして誠にありがとうございます。今日アルマの2人、ゴータムとジャン・フィリップをご紹介、彼らの活動をですねご紹介できるのを非常に嬉しく思っております。で私、実は、この7月にセビリアで FFD4 というファイナンシャル・フォー・ディベロップメント開発資金会合というのが開かれまして、その時にジャン・フィリップと会ってこんな面白い活動をしている人がいるのかと思って、でその後ワシントンに行った時にゴータムと会ってまたいろいろとお話を聞いてますます日本のインパクト投資コミュニティの皆さんにご紹介したいなと思って本日この機会になりました。少しなんでJICA がですねこういうインパクト投資に取り組んでいるのかということをご紹介できればと思っております。すいません、ちょっと大げさな題名で恐縮なんですけども、今年やはりトランプ2.0が始まって開発資金の世界でも非常に大きな変動が起きていると思っています。で次のページなんですけれども、そもそもこの SDGs を実現するための資金ギャップというのがよく言われておりますけども、COVID 前は2.5兆ドルだった、それがもう現在4兆ドルまで広がっていて、これがさらに6兆ドル以上になるというふうに言われています。そして一方でODA の量が減っていると、USAID が実質閉鎖されたというのはもう皆さんよくご存知だと思いますけれども、ヨーロッパにおいてもですね、防衛費を増やさなきゃいけないということで ODA のその支出というのがどんどん減っているという傾向があります。そして一方で相手国、グローバルサウスの諸国の多くがですね、債務問題も抱えておりまして、ここにありますように、債務の利払いの方が社会支出、教育とかその保険支出よりも大きくなっている国の国民が34億人いるというようなデータもございます。そういった中で、この先ほどのセビリアの開発資金会合が開かれたんですけれども、じゃあ次お願いします。アメリカも参加しないということだったんですが、1万5000人以上が参加をして、50カ国以上、非常に熱心な、むしろ積極的な雰囲気で、この危機をどうやって克服するのか、そのためにもその国内資金、相手国の国内資金とか民間資金動員をもっとやっていくためにはどういうアイデアがあるのかというのを積極的に議論されておりまして、やはりブレンディッドファイナンスを広げていこうというのが議論の中心だったと思います。で次のページお願いします。こんな感じでですね、セビリアの46度を超える熱波が訪れておりまして、日本ではFFD4 の報道はなかったと思いますけども、熱波が訪れているという報道だけはあって、うちの家族からもお前ら大丈夫かっていう連絡があったんですけど、次のページお願いします。 非常にアフリカとかラテンアメリカからの参加者も多くて熱心に議論がされておりました。で次のページお願いします。日本の対応なんですけども、松本政務官も参加されて、日本がどういう対応をするのか、その中に、JICA の法改正、今年の4月に行われましたけど、それによって、よりリスクを取る、活動をすることによって民間資金を動員していくということの紹介もございました。次のページお願いします。で JICA もともとこの左側にありますようにソブリンのオペレーションが多い機関でございまして、テクニカルコーポレーション、グラントエイド、ODA ローンと、これが10ビリオン以上の大きさで、一方で今民間資金向けのインパクト投資、これが1ビリオンを超えるような規模で徐々に拡大しております。次のページお願いします。これがその民間向けのインパクト投資の推移ですけれども、最近は1ビリオンを超えるような規模で実施をしておりまして、これを通じて民間資金を動員するということをやっておりました。ただこれでは足りないと。もっとやっていく必要があるということで、4月の法改正に結びついたということでございます。で、今まではこのデッドとエクイティのを通じた民間投資、インパクト投資をやってたんですけど、ボンド、相手国の機関が発行するボンドを購入する、ポートフォリオギャランティーを出すというようなこともできるようになりました。加えて8月になるんですけども、TICAD の場でファーストロスエクイティも行います。あと、これまでトラックレコードを非常に慎重に見ていたんですけども、ファーストファンドであっても投資をするということを発表いたしました。で、次のページですが、その最初のケースとして、アフリカ向けのスタートアップを中心としたファンドにカタリティックトランシェとジュニアトランシェに JICA が入りますということも発表させていただきました。こういうディリスキングの活動を通じてですね、できるだけ多くの資金を動員して途上国、エマージングマーケットでインパクトを拡大したいと、それが私たちの考えていることでございます。次のページお願いします。これはちょっともう古い数字ですけども、世界の金融資産、約400兆ドルあると、で ODA は0.2兆ドルと言われておりますけれども、この400兆ドルをできるだけインパクト、投資にも振り向けていきたい、そのためにどういう活動ができるのかっていうのを、私たちもいろいろと考えていきたいというふうに思っております。で最後のページは、これは最近ホームタウン構想でいろいろとお騒がせしておりますけれども、この理事長の田中が最近記者会見で話した言葉ですけれども、日本っていうのはやはりこの国際協力をしていかないと生きていけない国でもありますし、それがODA であったりインパクト投資っていうのは長期的な信頼を得ていくための投資でもあるんじゃないかというふうに言っておりますが、まさにそうかなと思っております。で今日ご紹介する2人の活動っていうのはそれぞれインパクト投資に非常に長く20年前から出会ってインパクト投資の活動をそれぞれやってきた人です。ゴータムさんがマイクロファイナンスにも長く携われて、CGAP というマイクロファイナンスを推進するイニシアティブでも働かれていました。ジャン・フィリップさんはまさにこのインパクト投資の先駆け的なもうバンブーキャピタルとかそういったところをそのファウンド、まさに設立された方であります。彼らが出会ったのも20年前、そして今2人が一緒にこのALMAで活動されております。ぜひ非常に面白いお話が聞けると思いますので、ご質問などいただければと思っております。そうしましたら、So the floor is yours. Thank you very much.
Thank you so much for allowing us to come and share with you our experience and the work that we do. Please allow me to thank Hirata-san, Mayumi, Yuka, for inviting us to present at this seminar. And I also like to appreciate the involvement of Masanao and Chihiro as discussants. So we're very excited to share with you what we do at ALMA. And we'll focus on giving you an inside look at how we make our investments in emerging markets in impact. And we really welcome all of your questions and feedback and ideas at the Q&A and afterwards at the networking. My name is Gautam Ivaturi. I'm based in Washington, D.C., and I'm in New York a lot of the time. I'm one of the 3 co-founders and managing partners at ALMA. As you can see from my background, over the last 25 years, I've worked quite a lot in emerging markets at organizations like CGAP in the World Bank, at the IFC, the International Finance Corporation, on Wall Street. And then for most of the last 20 years, I've been an operator, an entrepreneur, starting fintech businesses, including microfinance companies in India and in Africa. And in fact, as I noted there, in 2002, I had the very good fortune of meeting my colleague Jean-Philippe when we were much younger and did not have so much gray hair in India, where I was the CFO of a microfinance organization. And Jean-Philippe came to make a loan to our company. And so we have known each other for 20 years and recently got together to again collaborate on something very exciting. Let me turn it over to Jean-Philippe for an introduction.
So I'm Jean-Philippe. Very nice to meet you all. Thank you for your time. Thank you for coming. Thank you for your interest. I'm based in Geneva. And like Gautam, I've spent the last 25 years doing impact investing in emerging markets. Prior to that, I was a consultant at McKinsey. I worked in the UN and I got my MBA at Wharton in finance. And then in 2001, I became one of the co-founders of a company called Blue Orchard Finance that was specialized asset management company to invest in microfinance banks worldwide. We started with $10 million under management in 2001, and today Blue Orchard manages $6 billion of loans to microfinance companies and SME banks. And then in 2012-13, I launched another asset management company, also specialized in impact investing, called Bamboo Capital Partners, which has been acquired 2 years ago by a large consulting company called Palladium. And I hope they will get Bamboo to the same success of Blue Orchard. And then recently joined ALMA, that we are going to tell you about. And on the side, I'm also involved on the investment committee and different boards of impact investors. So very nice to meet you all, and thank you for coming.
A quick introduction, and I want to apologize that we're giving this in English. Our Japanese is not so good, so you'll do better. Just trust me, you'll do better if we speak in English than Japanese. So who is ALMA? These are the key senior people on our team. As you can see, we come with a lot of experience from major international organizations, private sector and public, including development organizations like MIGA, like FinDev Canada, where our colleague was the head of impact there. We have colleagues from DFC, the US Development Finance Corporation, from the IFC. The head of digital finance is now on our team, former head of digital finance at IFC. So very, very strong team. And I like to say that we play jazz. You know, that's the kind of music we're playing here. I feel that each of us on our team is kind of a virtuoso pianist, a virtuoso bass player or drummer. And then we have to set up as a company the systems and the precision and the technology to let each of those people really do a wonderful job and allow them to improvise and do what they do best. So that's my musical analogy for ALMA. What is ALMA doing? We are an impact investor. So as you all know, there's different kinds of investing, and we sit in the middle. We want to have market returns. We're looking for commercial returns. We are profit-oriented, and everyone we work with that we finance are profit-oriented, but we want to make investments in companies that are having an impact. And so that really is to us what impact investing is, as opposed to sustainable investing, responsible investing, which are very valuable, but something different. I would propose that JICA, for example, is a catalytic investor. Its objective is to bring private capital in and to really have impact, and it may be willing to take below market rates. The universe we play in is this. It's this intersection between emerging markets, debt investing, because we are only debt investors, and early stage businesses that are innovating and trying new models to achieve financial access, to achieve climate solutions, to improve women's empowerment. At this intersection, we look for what you see in red: senior secured opportunities that protect our downside risk. The number one concern for us as business people is not losing our principal. That's number one. We obviously look for mature legal jurisdictions. So when we lend, even if the project is in the Congo, we're lending in the UK, for example, to the borrower. And we look for companies that are focused on profits that have traction. And so at that intersection is our focus area. Our current exposure is, again, all emerging markets. So just over half in Africa, a third in Latin America. And some of the countries that we have projects that have been operating are everywhere from Mexico and Brazil. Panama, Colombia is a big market for us in Latin America. East Africa, Ghana is a big market for us. And then, of course, in India. So who do we lend money to? We make loans. The loans we make are usually between $1 million to $20 million in size. We start small, build a relationship, and grow. And we look for companies that are in the financial sector, in climate solutions, could be electric vehicles, it could be solar. And then we also finance some nature-based solutions, forestry, and then finally marketplace, innovative logistics, and other companies that need working capital. What's interesting, I think, in what we do is that we really focus on what the customers say. What do the customers of these companies say about the impact? And so as you can see on the screen, I apologize, it's small, 52% of clients in one of our cases, one of our borrowers, say that affording education is the top reason their life has improved. So this is a low-income borrower in Africa who's taken a microloan. They've used it for education. They're also using it for household bills, income, business growth, and this is the way their life is improving. On the right side, we see that 27% say their household income has very much increased because of this financial service. So one of the things that we do as part of our operation is always try to listen to that customer again and again, and hopefully that's useful insight for the companies who are taking our capital. Just as an example, these are two companies in Africa that we support, where we are a major source of financing. And I'd like to highlight the bottom table, which shows what we track when it comes to, for example, gender. So for each of our borrowers, we really want to understand what is the current level of women's participation at the staff level, at the board level, at management level, as customers, and then over time, how can we create a plan to promote that and increase that? And we look for borrowers who care about this. If a borrower comes to us and they have a wonderful business, but they do not care so much about their customers, about how their employees participate, about gender equality, that is not the right borrower for us. So we're really trying to select customers, borrowers who are commercially minded, but also have the same values that we do. So where has our capital come from and how big is ALMA? To date, ALMA is about 215 million of committed capital for this emerging markets impact strategy. All of this money is private money. So far, we have not taken any catalytic money or DFI money in terms of our capital. It's all from asset managers, an insurance company, investment fund, family offices, etc. Oh, let me say that by the end of Q1, we're experiencing some good growth right now with some new facilities. So we expect to be at about $1/3 of $1 billion in total committed capital in Q1 of next year. And how well have our investors done? So these are the people who've given us money. What have they gotten? In addition to the impact, from a financial standpoint, what we have been paying is between 10 to 13% over the last 5 years. Obviously, rates have come down. We were paying higher rates 5 years ago than we are today. But I mean, the other thing, actually, rates have gone up, but our rates have gone down. But these are the vehicles we've set up with institutional investors, and there have been no defaults to our lenders. So we think this is a very strong commercial story as well as an impact story. I'll just close this piece here summarizing what ALMA is. So we think of ourselves as a trusted partner. We want to find these businesses and grow with them for the long term. We earn mid-teens USD in terms of our rates, and then we pass most of that on to our lenders. We have impact, over $200 million raised from private sources, about 150 million dispersed. We have staff in emerging markets in South Africa, Colombia, elsewhere, and we have a strong track record. So that's a quick summary on who is ALMA. And why are we here today? Exciting to talk to you and to talk to partners like you, because for us, we believe that blended finance and the partnerships that Hirata-san shared in his presentation is the future. That's the future for us. That's how we get much bigger and have much more impact. We have been able to find private investors with public sources of capital now, providing guarantees, providing first loss capital, catalyzing. We think we can get much, much bigger. And that is what we're beginning to do now. We're very proud to say that 100% of the capital so far is private. More than half of that capital never had any impact investments before. They never had any emerging market impact investments before. We were the ones who convinced them to get into this space. And almost 80% today do not have any sort of government guarantee protecting them. They're taking all the risk as commercial investors. So we think with that track record, we're in a position to partner with catalytic capital like JICA and other DFIs to really grow. I think this is the big question for many people in the room is, okay, you're making these wonderful impact emerging markets investment, but that's kind of scary. How do we do that and not lose money? And so I would like to share with you some of the systems and strategies that we use. And I'm sure that you have experience that you can share back with us also that could be useful. I won't speak about everything here, but I think to high level approaches, 3 parts. When we want to think about mitigating risk, 3 parts. Number 1, who are we lending to? For us, that's the most important thing. Jean-Philippe and I were discussing yesterday, if you lend to the right person, but you have a bad structure, you'll get your money back. If you lend to the wrong person with the best structure in the world and all the legal protections, you're going to lose your shirt. So we really want to focus on finding the right people. And those are people who are experienced. Experienced entrepreneurs for us is very, very important. They've learned many lessons in their life and their business careers, and they are thinking long-term, want to be a partner with us for the long term. We look them in the eye, we meet these people, we get that feeling that there's somebody who we can trust, and then we lend. And sometimes we have done all the work of due diligence, legal drafting, documentation, and late in the game, we find that the people we're working with act in a way that doesn't give us confidence, and we cancel and don't go ahead. And we've done that in a number of cases. So the people is very, very important. From a structuring standpoint, again, you can have all the legal documents in the world, but at the end of the day, we need cash. We need cash to come back. And so what we really try to focus on, whether it's Latin America, Africa, India, is trusts, control accounts at banks, where all of the income that's going to our borrower, we have some way of trapping that. That's a very important mechanism for us. And obviously, hedging foreign exchange currency is critical. That's another important piece of structuring. And finally, on the monitoring side, because once you've made that money, it's very easy to make a loan. It's super easy to make a loan. The hard thing is getting the money back. So the real work begins once the money's in their hands. Once the money's in their hands, we need to know exactly what's happening. So what we do is real-time tracking, and we'll show you some of that. Today, our system tracks over 1 million microloans that our borrowers are making in real time, which is over $200 million of collateral. We know what's happening with that. We also have very frequent interactions with them via WhatsApp, and we work to build their institution. So let me stop. This slide is very boring. I apologize, but we'll show you some pictures and details. As I mentioned, choosing the right borrowers is key. These are 2 of our bigger borrowers, long-time borrowers. They're both in the finance space. One across Latin America to new to credit customers, people who've never taken a loan. That's the top one, Juan. And the bottom one, Richard, is a leading micro lender in Ghana, one of the bigger microfinance organizations. So these are the people now we've been lenders to since 2021. In this case, we started with a small $3 million loan. And since 2021, we have grown that, and the exposure there now is about $15 million. That was a $1 million loan that today is about $8 million. So these exposures grow over time as we build that partnership, and that's what we're here for. We're here to help these people scale and have more impact. Some of you may have an analytical background or an engineering background, but when we're looking at our borrowers, we need to make sure that their track record of lending is good. And so this is a sample of looking at how they make loans, month 1, month 2, month 3, month 4, across all of these cohorts and how the money comes back. So this is the kind of analytics we do to figure that out. Again, very data-driven, and we have a team in India led by our colleague who used to work for American Express and Goldman Sachs to really make sure our analytics are Excellent. Okay, you have to forgive me for, again, some boring slides, okay, but these are important. So once you've made the loan, as you saw, we're a small team. So how do we make sure that the companies are doing well? And I mentioned the real-time tracking. So here we set a covenant for this company. We said at least 50% of the loans you make, at least 50% of the money that you make loans has to come back in 3 months. So we need a system to track that when this company makes a loan, 3 months from that date, half the money has come back. And that's what this chart shows, that our systems continuously track the cohorts every month, that in June, July, August, every time they made loans, 3 months later, at least half of that money had gone back to them. And we know, therefore, that their loans are performing well. So this is all automated. And so we can check this all the time. These are the kinds of systems we've had to build to make sure we're on top of things. Same thing with payments. So far, all of the payments from our borrowers in these markets have come back on time. One of the reasons is because we have automatic payment reminders. This is just a very boring screenshot of our system and the date at which payments have gone out automatically saying your interest has to be paid, your fee has to be paid, please pay it, and that kind of system keeps on running. So, and finally for collateral, making sure that every time a company pledges collateral to us, our system is checking. In this chart, the red dot is every day checking that the value of collateral in their system, their own management system, is sufficient and exactly how much it should be. So just an example of the kinds of systems we put in place. And then the more fun stuff is this. The fun stuff is really interacting with our borrowers. So, you know, these are some of the companies that we work with, and I just took this snapshot from my phone this morning, but it's actual WhatsApp groups we have with every borrower. So 5 or 6 people on our team are always talking to 5 or 6 people on their team and understanding what's happening in the company. Last couple of slides. The big thing for us is finding this borrower, making sure there's somebody we like, and then improving them over time. We use a tool called SPI Alinus, which is an industry standard. That tool looks at client protection. It looks at the strategy that the company has. It looks at their governance. It looks at their pricing. Is it fair? And all of these things give us a score. This company had very good scores on client protection. That's the orange section. And they had pretty good scores on being responsive to their staff, their human resources. Now, the other sections need work. So what we will do with this company is set an action plan, and we make a loan to them. We'll say, you have to follow these actions, and we will monitor that. And if you don't follow those actions, that can be a default. But this is our way of working with them together, setting a plan so that they improve as a business. Once they improve as a business, we can make more money lending to them. Our money is protected, we can grow, and they can have more impact. And then, of course, another slide just wrapping up on making sure that we're always listening to customers. So this is talking about customers who say that they have improved their lives because their business has taken this loan and business income is growing. So that's an inside look. I apologize that some of that was very small and hard to read, but hopefully you have a sense of how we do the work we do. How do we make these loans? How do we protect our capital, protect our investors? And I think I'll turn it over to Jean-Philippe for the next section.
Thank you. Can you change? All right, so the fun part, talking to investors. As you can see, and as Gautam has said, we have 100% of private money today under management, coming from both European and American investors. It's family offices, it's asset management companies, providing us with some mandates or investing in our SPVs. It's insurance companies. The interesting thing that I noticed when I arrived at ALMA is that the commitment of those investors is usually growing over time. So they start the relationship with us with smaller amounts, and then 1, 2, 3 years later, they double down or triple the assets under management that they entrust us. The second thing that is not mentioned here, but many of those never had any exposure to emerging markets. And they trusted us and our systems, as Gautam explained, the real-time monitoring, the underwriting process, the proximity with our borrowers, and of course, the track record. We never had any default to senior investors so far, and returning 10 to 13% in US dollars. So that's quite attractive. And so those investors, 52% of them decided to take the step of going to emerging markets with us. So that's one thing. Now, how do we work with institutions? Maybe it's worth noting that we do not structure fully regulated funds as most institutional investors would be used to. We create what we call SPVs, special purpose vehicles. And we register those, of course, in suitable jurisdictions. Could be Switzerland, Luxembourg, Delaware, but also here in Asia, or Mauritius for Africa. And ALMA really acts as a fund manager. So we originate, we execute, we service, we monitor all the loans we're making. And something that is not very often happening, at least in impact investing, I think, is that ALMA as a company and the founders and the partners are most of the time putting their own money in the first loss tranche of the SPVs we're managing. So this means that it gives a lot of confidence to our investors that if something wrong happens, we are the first hit. We lose our money first. And they like this alignment with us very much. It gives them a lot of confidence. Why do we also choose special purpose vehicle? Because they are very flexible. We can structure them small, big. We don't need a lot of servicers around. They can start small. They can, of course, be big. And they have better economics. The total expense ratio of an SPV is probably 20% of a regulated fund. So that's quite attractive in terms of economics. And yet you have the full servicing and the full professionalism around the management of the SPV. And we follow, of course, good practices in terms of security and monitoring and reporting. Now, the beauty of an SPV is that we can structure an SPV for only one investor or many investors. And when we structure typically for one investor, which is the case, for example, right now, we are structuring for a development finance institution in Europe. And they liked our approach and they say, okay, we want to start with $30 million just for us in one SPV dedicated for us. You put some first loss, please, but we are going to take 85 or 90% of senior, $30 million. And we're ready to go. And we're in due diligence with them and we're structuring this SPV. And they're happy because they are going to get the software plus 6%, which is today what, 10-ish% in US dollar, protected by 15% first loss in those opportunities and in the process that they are due diligencing. It may be that we have more investors coming, then we need to align, the interest of everybody, of course. But then usually what we can structure is not only a senior tranche and a first lot, but we can squeeze in a mezzanine tranche that pay much higher interest, but is still protected by our first loss. And the SPVs that we are building can be customized for the interest of our investors, meaning if an investor like this development bank is telling us, oh, I would like 60% of the portfolio in Africa and 40% in Latin America. We can do that because we have the capabilities of originating the deals across the emerging markets. So we can really assemble a portfolio that fits the interest of each of our investors. And we can do that also for the sectors, because as you have seen, we do fintech investments and climate investments. And some of our investors tell us, well, I want 100% fintech, or I want 100% climate, or a mix. So very customizable type of portfolio investment strategies per SPV. And, what we are doing now is closing $130 million, but we have realized that in our borrowers, we have probably 7 to 10 borrowers that are already repeat borrowers and that are experienced fast growth and that have completed cycles of financing with us with no problem. And maybe we're thinking that a way of de-risking further an instrument would be to dedicate an SPV that would be much larger, probably $200, $300 million, but to finance only repeat borrowers, meaning people we know and we have worked with already, which means that you don't invest as an investor in a black box, but you know exactly to which companies the SPV will be lending money. And so maybe this is something that could be interesting for institutional investors willing to, again, make the step to impact investing, make the step to emerging markets, but in an environment that is very risk mitigated. And we could structure that possibly, but that's very, open for discussion, with a first loss, a mezzanine, where maybe a development finance institution would want to come in to catalyze private sector money on top. So that's, generally speaking, what we have in mind for the next year. And I think this is it for now. Thank you very much for your time and attention. And I think we'll pass the word now to the discussants, right?
Thank you very much for your very, very comprehensive presentation. And I would like, so,どうしましょう。馬場さんから先でもいいですか。もしコメントとか質問がありましたら、これまでのご経験から、ちょっと、少し、コメント、ご質問いただければと思います。その後、矢崎さんにお願いできればと思います。
First of all, thank you very much for comprehensive and informative presentation, and also for having me, JICA and IDFI and ALMA's colleagues. I'm Chihiro from Sumitomo Mitsui Trust Bank. We, Sumitomo Mitsui Trust Bank, started impact equity investment from 2022, and we do several investments in emerging countries as well, and we see the huge opportunities in this market. Based on that experience, we, and I believe particularly B2C business and consumer or retail finance is a promising growth sector in regions with increasing populations and expanding the economies. And in Japan, I think private investment in emerging markets still tend to be equity investment by corporate companies for R&D and strategic purposes. Investors, institutional investors often have concern about exchange rate risk, which is difficult to mitigate, and also the volatile business environment. So credit investments introduced today would offer attractive opportunities for investors seeking stable return in emerging market. However, Japanese institutional investors do not yet allocate so much for private debt space. So while global investors are quite active in this space. So, and also in Japan, so your ALMA's approach is has a very innovative approach, including a fast loss tranche. But in Japan, the presence of a fast loss tranche often or sometimes creates the perception that the product itself would be a high risk product, so which can be also another concern happened. So so I'm really interested in a global investor's view on this private credit market and ALMA's approaches, and also very much looking forward to today's discussion, including with the floors. So yeah, so this is what I feel now, and thank you very much.
Thank you very much, Bobo-san. So maybe you want to reply to the questions that Baba-san raised?
Yes, I will start. Jean-Philippe, please add. So I think it's a very interesting point you made about first loss, the existence of first loss being a sign of potential risk. And certainly, as you suggested, global investors that we have spoken to and taken money from in the US and Europe look at it differently. And what they structure with us are not just sizable first loss, but also cash controls and waterfalls. So because they acknowledge that when money comes in, they want to be first in line to get that money. So we have waterfalls. So if a borrower repays us this month $1 million, the senior lender will take all of his money first, and we are taking it second. And so that, I think, comforts them that from the people doing the work like us, we're second in line. So I don't know that I'm very articulately answering your question, but I do think that once you accept that there are people who need to have different priorities, then the mechanisms that you put in place, including cash controls, are very useful and I think would be good protections for even Japanese investors.
Yes, maybe I would like to add, I thought that the remark was very, very good. I don't think that the investors we have today in our products would have invested, even if there is a first loss, if they were not satisfied with their due diligence. So they see the first loss as one additional security, not a condition to invest. Because it's not because you have a 20% first loss that suddenly you do a good job. You have to be credible in terms of your underwriting policies, collateral policies, monitoring policies, and that's what they check first. Now, if cherry on the cake, you have an additional guarantee, then it becomes a no-brainer for them, and the decision-making is faster, and the amounts of money are bigger. So I understand the concern and the reaction, but for us, it comes as an additional element to the structure as opposed to an absolute must.
Yeah, that would be great approach is to persuade the the players in the internal parties. So I think that we always see the lots of investment opportunities, and so among those opportunities we have to pick some investments. In that case, we tend to select the easier one. So because of the the administrative cost and persuading effort. So but so as you mentioned, it will be a supporting mechanism, and so it would be might be easier to go through the due diligence. So yeah, so the mindset change and also the way of the explanation might be very important to move forward to such kind of new and innovative structures. Thank you very much.
Thank you.
Thank you very much, Baba-san. So maybe Yagasaki-san, please.
Thank you very much for the presentation. Let me allow to talk in Japanese. 日本語で失礼いたします。私、ここにおりますのは、ジョン・フィリップとこの10月にですね、ジーンの、グローバルカンファレンスでご一緒しまして、で、1時間ぐらいお話をさせていただいて、スキームの話であったり、インパクトの話をさせていただく中で、何か一緒にできたらいいねというふうに、その場を別れまして、その後、日本に来るということで、この場にお呼ばれさせていただいて、こちらでコメンテーターとして座っています。Merci beaucoup。では、今、馬場さんから結構、包括的なご質問とコメントがありましたので、少しスペシフィックな質問をさせていただければと思います。ティームメンバーのところについて、ジャズセッションのような話いただいてましたけれども、 いろんな国にそれぞれメンバーがいると思いますが、それぞれの強みを、案件にどう生かしているか、ソーシングの観点であったり、バリエーションの観点のところを教えていただければと思います。
Thank you, Masano, for the very good question. So I'll give you an example. One of our team members who was based in the United States recently relocated to Bishkek, Kyrgyzstan. And because she is there now and she's a senior person, she has developed quickly for us a very strong local presence and relationships with local investors, banks, potential borrowers, co-investors, sources of capital. And I think that is an example of using the opportunities with people who are entrepreneurial and senior to quickly build a new business for us. So in fact, we are finding that as one of the few international investors, debt investors at an early stage in Central Asia, we're now receiving a lot of incoming interest from borrowers. Similarly, we have a technology team based in India led by someone who's very senior, who is dynamically experimenting with artificial intelligence through pilot programs with local startups and projects. And so that's why I like my analogy of people who are on their own improvising simultaneously, but we have to have a very strong core. And that core starts with values and relationships. And so we were talking earlier today at lunch about how all of the people on the screen on our team, they joined ALMA and no one has ever left. Once you join the company, so far in 5 years, we haven't had anyone leave the company because there is a very strong culture and chemistry we look for when we grow and add people. So I think it's a very perceptive question because we can't allow full freedom. There has to be a strong network and connectivity. And I think that really is around systems, process, and culture. And then people can really do what they do well.
And as a newcomer to ALMA, I can comment more, which is the entrepreneurial spirit, the seniority of the members, the clarity of the roles that are expected from you and the deliverables that are expected from you. But I would add one more thing, and it's the availability of anyone in the team at any moment to answer any question I have. I sit in Geneva, I post on our WhatsApp, and we have different groups. One question, usually it takes 10 to 15 minutes for my first answer to come to me from someone in South Africa or in Colombia or in the US, and everybody is concerned. Everybody is pitching in. And you can imagine the level of seniority that those guys have. I mean, the last recruit is the global head of digital finance at IFC. So when you ask a question and this person or colleague answers in 15 minutes, it's very rewarding. So it's also an environment where we keep learning a lot. And so that's nice to give back to the company because it's really a give and take all the time. And that's what makes it a very vibrant environment. And nobody wants to live in an environment like that, especially since we're growing very exponentially now. But thank you for the question.
Oh, thank you very much. So 15 minutes make me very impressed. It could be happen in my team too. Even if we were based in Tokyo and the same office, it would be not so easy for us. Yeah. Just from my curiosity, how many team members you were exactly?
Today we have 17 total, of whom 12 are sort of principal lead managers at the senior level. And we will likely grow to about 20 in the next few months.
Okay, thank you. 2つ目の質問をさせていただきます。日本語で失礼します。アルマがファーストロス、先ほどのファーストロスの話ありましたけれども、ファーストロスを取られるというその資金源っていうのは プライベート投資家ではないと思うんですけれども、実際にはどういったものを使われてるんでしょうか。ハードかキャッシュ使われるんでしょうか。
Thank you for the question. The first loss capital is also today private capital, which has been put in by a family office. One of them here is Leonite Capital, which has contributed so far 5.5 million. And then we have also from our own team, the founders put in about 6.5 million so far. So we are very much invested in success.
I get it. Thank you.
Just like to add that we are looking to grow, and as we grow, we have now reached a stage where we need to find more outside investors for first loss. And this is a reason why we have been working with catalytic investors, DFIs, and others to participate and act as that first loss or mezz tranche so that we can grow the entire base.
Yeah. And one reason why you are here with Jacob and us. Yeah.
Absolutely. Yeah.
Thank you.
東さん、ありがとうございました。念のため、ファンドレイジングイベントではないというところでですね、我々、ノンプロフィットですので、これはあくまでもパブリックなものだということでお願いいたします。そうですね、オンラインの方も含めまして、そろそろ Q&A の方に移っていきたいなというふうに思うんですが、何か。
Thank you very much. My name is Yuki. I am CEO of ArtNest, which I launched last month. And I know John Philip for many years, like maybe 13 years. Welcome back to Japan. I'm really happy to see you back here in Japan. The first question is, knowing that John Philip has a lot of experiences in non-financial sector, maybe I have missed what you have said, but apart from microfinance, what kind of portfolio companies do you have? Second question is, I have a question to Baba-san. I wonder why Japanese investors do not go into private debt. What's the impediment? These two questions from my side. Thank you.
Thank you. The sectors that we are invested in is finance. That's the biggest sector. The second sector is climate, which includes everything from solar. So for example, rooftop solar for commercial industrial customers in Mexico, we have financed. And we have also financed for 5 years now, quite a long time, nature-based and other carbon credit projects. So everything from mangroves in the Congo to forests in Papua New Guinea, in Argentina, which generate carbon credits, which get sold to companies like United Airlines and Mercedes-Benz and others, and that generates the capital that comes back to us. And then the third sector that continues to grow now is working capital for platforms, marketplaces. So as an example, we did a recent loan in Central Asia to a company that is transporting goods across countries like Georgia and Kyrgyzstan, Uzbekistan, Kazakhstan. And that company is paying small mom and pop, we call them mom and pop trucking companies, to move the goods. And so they need working capital to pay those people quickly before they collect money from Coca-Cola and other big companies. So this working capital for platforms and logistics is a new sector for us that's growing.
Interesting. Carbon credit projects or businesses, does it yield more than 10%?
Yes, when it works. When it works, and it takes time to work, because carbon credit markets, due to politics and other reasons, go up and down. And so we have had some very successful outcomes where we have earned much more than 10%, because we have to be paid for that risk. But then we have to be very patient with the process of issuing the carbon credits. Yeah, so that is still a small portion, but we think it's important.
And this is why, Yuki, we also craft the investment strategy per SPV depending on the appetite of the investors. So some investors tell us, your carbon credit no, thank you. We want only fintech companies and finance because it's probably a bit less risky. So we want that. Some other investors tell us we want a mix between climate companies, carbon credit projects, and fintech because we like the impact that is generating across the board. But that's why we are very specific in terms of the investment strategy per SPV for the investors. Yeah.
Yeah, thank you. I don't want to dominate the Q&A session, but I have, so you reminded me one question, SPV. If SPV is so flexible and working very well, fitting in this investment, why others do not choose SPV and why many people choose fund structure?
I think that is the Darwin's law of natural selection. I think that relates to Darwin law of natural selection. So what happened is when we started this business, we could not go to a JICA or to a government and say, please give us money. We were first-time fund managers. We were on Wall Street and we found an investor who liked what we were doing. We created an SPV for that investor. We found the first loss and we started. And then we showed that to the next investor and they liked it. And so that has just stayed as our model, whereas I think others in this space are starting with the fund concept and going to soft capital to raise an investment fund, and they take 3 years to raise an investment fund, or 4 years. It's a very long process. He knows all about that, so I should let you.
Exactly. So when you're a first-time fund manager, even if you're a second, third-time fund manager, raising money through a regulated fund, you have to place the bar quite high in terms of fundraising amount that you need to succeed in order for the economics of the fund to be performing, because you have so many servicers and regulations and compliance and reporting imposed on the fund that the total expense ratio of a fund like that could be 3, 4, 5%. And so many of the first-time fund managers cannot start or try to start and then die after 2, 3, 4 years of trying to raise money. Whereas with SPV, it doesn't cost anything. You go very quickly. It doesn't mean that you do anything, right? I mean, you still are compliance, KYC, AML policies, etc., but you are not with the burden of the fixed cost on the structure, and you pass that saving to the investor, right? Which allows you to be more attractive to the investors. So first, we are going to advise investors to come in those SPVs, and then we'll see.
馬場さんもしよければ、はい。
この中に私よりも資産運用たくさん詳しい方でたくさんいらっしゃると思うのであれなんですけれども、プライベート領域全般への投資が少ないと、まだまだ伝統的資産のその国際上場株というところが中心なので、そもそもプライベートクレジットもプライベートエクイティもそこに行くお金は少ないし、それがなおさらエマージングカントリーということになればリスクが大きい中であえてそこにアロケーションするのかっていうことがあるのかなと。ただ一つ、例外があるとすれば、マイクロファイナンスは比較的機関投資家の皆さんもお金を入れているかなと認識をしておりまして、でそれは、伝統的資産とデカップリングしていると同じような動きにならない、何かイベントが起こった時にっていう要素があるから、その分散の観点で、比較的マイクロファイナンスは入っている例が多いかなっていうふうに思います。この点、もし他に質問がなかったら後でALMAさんにも聞いてみたいと思いますけれども、はい、私としてはそのように認識しております。
はい、ありがとうございます。大変興味深いポイントでございました。
Thank you very much for your interesting presentation. My name is Tomohiro from Portfolio Investment Management Division, a newly born division actually in JICA this month. So overseeing existing equity portfolio, about 30, including funds and direct investment. And yeah, I was pretty much interested in the structure of SPV, which we do not usually see in our portfolio. So I was wondering how this structure works from the viewpoint of investor. Usually the funds is set maybe 10 years period, and the first 5 years is investment period, and then the coming 5 years is for return gaining period. And then, so how if we join this SPV, how does it work? How long is the period? And I'm especially interested in exit as an investor. Thank you very much. Yeah.
Okay, shall I start? So I think, first of all, in terms of the maturity, you can have SPVs for 2 years, 3 years, 4 years, 5 years, 6 years, 7 years. So we started with short duration because the original investors wanted short duration. But as we see companies grow in the market, they need longer term financing. So the last SPVs that we are now structuring are 7-year and 10-year SPVs. Okay, so that's for the duration of the vehicle. Now, in terms of money back and exit, it is also a discussion with the investors. For example, the 10-year vehicle that we are structuring right now, the amortization of the loans, maybe I should start by saying that when you invest in the SPV, you basically lend to the SPV. You're not buying equity in the SPV. You're a lender to the SPV. Okay.
All right.
So you're a senior lender, which means that on a monthly basis, you have payment of interest rates.
Okay.
Yes. And then we amortize your debt as a product of our negotiation. You can say, okay, so one example, 10-year life of the vehicle, amortization 50% year 9, 50% year 10. But there is another vehicle that we're structuring right now with a development finance institution that says, okay, 7-year duration, and we start amortizing year 2, but very gradually until year 7. So it depends on the risk appetite of the investor. Obviously, for us, the more we can recycle the money during the life of the vehicle, the better for the performance of the vehicle, right? And the use of the money. But we are very flexible in terms of structuring, you know, the duration and the amortization. But you are a lender to the SPV.
Okay, thank you. I thought the investors inject capital by equity, but no. It's by lending. And so you create SPVs for different projects, like one SPV for one project, like just like funds is created for different purposes.
Yes, we create them sometimes for one investment.
Okay.
But usually it's for multiple investments.
Okay.
And so the investor will say, like Jean-Philippe mentioned before, they want to do Africa and Latin America, finance, climate. In our own portfolio, we can say, okay, here are the companies that fit. We'll do 5 of finance and 3 of climate, or we'll agree, okay, give us this money. We'll do a maximum deal size of, let's say, 5% of the total. So it's very diversified. All of those parameters can be set up, and usually it's a mix of companies.
Thank you very much.
他に、ご質問ありますでしょうか。オンラインの方も何かあればいただければと思いますが。
Thank you for a very interesting discussion. I'm Wataru from Yoren. Actually, Yoren is one of the equity investor for AltCheck in Africa. And I have 2 questions. Do you have any industry preference to lend debt finance? So this is the first question. And second question is how do you mitigate or how do you deal with currency risk in emergency market? I think it's very, very big deal.
Yes. If I understood your first question, it was the industry focus that we have. And so far, our focus still is on financial sector. So we are lending to lenders. And AutoCheck, as you know, is financing used cars for small entrepreneurs across Africa. So that was a very interesting business for us because when we give them, we have about 20 million exposure to AutoCheck now. We are secured by the actual cars. So that's a hard asset that can be repossessed. So that was a very interesting exposure for us. So financial sector is a big one. But as I mentioned, climate has a lot of potential. And there is a lot of catalytic money, DFI money that wants to do more and more climate solutions. So I think that will be a growing part of our portfolio in the next few years. your second question was around foreign currency volatility. And there, what we do is for every transaction, we make sure that we are hedged at a minimum fully the principal, and often the principal and interest. And that is very flexible how we do that. Sometimes we create reserve accounts out of excess capital that the business earns. Sometimes we engage, or the borrower engages in currency swaps, non-deliverable forwards, call options, so that they have enough dollars to pay us back. But we are always lending in dollars so far and collecting in dollars. And now we actually, as we raise more European capital, we will have the ability to perhaps lend in euro for certain West African other markets and collect in euro. But so far it's dollar, and we're hedged.
So you mean, a second question, you don't use the local currency?
We are not lending in local currency.
Oh, okay, so
Yeah.
you use dollars or euro or something like that?
Yeah,
Okay.
we lend in dollars, yeah.
Okay, thanks. Appreciate it.
Regarding collateral, may I ask a question? So did you mention you also provide a loan to micro entrepreneur? Is it right? MFI. Okay, yeah, I'm curious about what type of collateral are typically considered for the micro entrepreneurs project.
So when we lend to a microfinance organization, the collateral is usually their loans. So we have been lending, for example, to one of the borrowers, 15 million for microloans in Africa, in Ghana. And we make a loan of 15 million. They pledge to us about 20 million of collateral, which then we're monitoring in real time.
And then sometimes you're the guy doing it, but sometimes we also structure an SPV on the side that where the cash collection from the microfinance institution comes back, so that we can secure the cash, and it's bankruptcy remote from the microfinance institution. So that's one additional structuring that we do to protect ourselves.
This is another my questions about the diversification of the portfolio, even under the condition using the SPV, because the SPV cannot diversify the each the lending entities, but you can also manage overall.
Yes, and again, the investment rules of the SPV we discuss with the investors. Some investors will tell us maximum 5% for each borrower, and maximum 50% in Africa. So we really can tailor the investment strategy to what the investors want. And sometimes we are also able to, we have a process where we check with the investor and we present them the deals we want to do, and they can say yes or no. So it of course, it shouldn't take too much time, but if you have the parameters and maybe it's as a way for the investor to feel that he is more in control, then we can start with a process like that, where we agree on an investment strategy, the profile of the borrowers, the diversification, the sectors and the geographies. But each time we are ready to make a deal, we come to the investor and we say, so yes or no? And then we can integrate in the portfolio. It has to be fast.
そうですね。では、神田さん、お話しいただいてもよろしいですか？ご質問ということで。
Thank you for your presentation. I'm an entrepreneur running microfinance in Bangladesh. So you mentioned that you monitor in real time to mitigate the risk. So what source do you use to obtain the data for monitoring? For example, like a bank transaction history, or like data from MFIs. Could you please tell me?
Really clear?
I think the question was, what software do we use?
What, like a source, data source?
Data source.
Yes.
Yeah. Yes, the monitoring that I showed was all our system connecting to the MFI system. So the technology they use to monitor all of their micro loans, we ask them to create a database just for us that is anonymous. So we do not know the names of the customers or their addresses or anything. And then we have the credentials to log in to that database in real time whenever we want. So our system keeps on doing that at least once a day. And then it takes all the data and analyzes it and shows us the results. And that's something we built ourselves. I hope that was the question.
Yeah, that's a thank you. I totally understand. Thank you.
Thank you so much. Additional question to that point. So would that be very burdensome for the MFIs, or is it really easy to do that?
It's somewhere between easy and burdensome, but it's closer to easy because they do not have to program anything in their system. All they have to do is give it instruction, which is create a replica every night, let's say. And so we have found that that's a simpler way of doing it than to send them a bunch of code and say, put this code into your programming. Where I think there is some challenge, which is critical, is when they say a loan is late, what does that mean? Or if they say a loan is a certain product, what does that mean? So defining all of the specific fields and defining the definitions of what is late, not late, all of this stuff, that is a dialogue we have from the beginning so that we're all speaking the same language. But I think if you do not have that, then your monitoring really is incomplete. And so that's important.
Very, very interesting. Thank you so much. オンラインの方で何かご質問があればと思いますが、何かございますでしょうか。大丈夫かな。フロアの方でも、リアルの方でも。馬場さん、お話しされますか。何かお時間あったらって言われたので。
Although I mentioned that the Japanese institutional investors is not inactive for the private debt space yet, but the one exceptional case is about the microfinance space industry, because when in terms of the risk and return profile, it is decoupling with the traditional investments like debt and public equities. So so would be the same things applies to the asset ALMA financed. So this is my questions.
It's a very good question, very good point. And we hear that from the investors that we speak to, which is that many of them are Wall Street investors exposed to US equity markets, exposed to New York real estate, exposed to the price of gold. And the sectors and the geographies we're speaking about are very decoupled from those risks. And so there is a lack of correlation between the strength of this asset versus some of those things. And that is something that they have found interesting. And then when you add the catalytic capital, whether it comes in the form of the first loss or a mezzanine tranche or a guarantee in some cases, then you're really not exposed to the same things anymore. And so that has been a persuasive argument, actually.
And if I may, maybe one other consideration. I remember talking to a pension fund, institutional investor, and there was always this idea that private equity, 20% return on equity, and it's a very exciting asset class. It is, but for the top cohort, right? When you look at the average return on equity and IRR of private equity across many investments and many funds and portfolios, if I'm not mistaken, we talk about 11 to 12%, not the 20, 30% everybody talks about. Now, if you compare that to private debt that gives you the same return with payment of interest on a monthly or quarterly basis, amortization whenever you want, and that you can forecast, and first loss, suddenly the risk-adjusted return of private debt becomes very competitive compared to private equity. So to whoever says, I prefer private equity in emerging markets, I'm thinking, maybe you want to think twice, because the de-risking that we are providing with the return that we are providing makes it a very competitive asset class, actually. So I wanted to just mention that.
The last thing, just on the same point, is that exits are very hard in private equity these days. Somebody mentioned exits, and you have now so many continuation funds and all sorts of instruments coming in to solve that problem. And that's one of the reasons why we're seeing the kinds of institutions who before were very private equity focused. And here I'm not talking about Japan so much, but in Europe and in America, now putting a lot more money into private debt because of that cash income and predictable exit.
I'm sorry, but and also when you think about the borrowers that we are supporting and growing, our private debt is non-dilutive of their ownership, right? So when we talk about owner, founder, business person that wants to grow their company, they are actually very eager to have our debt leverage their equity and not being us as a predator from the outside taking big chunks of their business that they started. So I find it also very positive in some ways to support entrepreneurs through non-dilutive assets.
I understood. And if the investors pursue the how can I say, top performance or the upside return or R&D purpose, it might be equity is better option, but when it comes to the stable return and less volatility, yeah, credit is very, very good opportunity and alternative. So I think the combination and the portfolio mixture is important, and also investors should think what is their purpose, what do they want to do. So this is the point. Thank you.
Very interesting discussion. Thank you so much. そろそろですね、あと7、8分ということになってきましたけれども、何かご質問とかある方いらっしゃいますか？ May I ask one question to you? あ、どうぞ。
Sorry. A bit in the impact sphere because we are a signer of IDFI. So could you explain a bit about your method or the way how do you measure the impact or manage the impact, something like that?
The same question that I was going to ask.
I will find some visuals. But, we are very much focused nowadays on the customer. And so for every single one of our borrowers, we are now asking them to share the cost with us of asking their customers the impacts that they are actually experiencing. And so far, we've been doing that every 6 months or 1 year. And we want to experiment now with doing it a lot more often. But that is a big way that we focus on impact, is actually directly from the customer and the voice of the customer. And they give us quotes, and then they give us these kinds of statistics on how their business operations are improving, or are they getting access to finance for the first time, for example. So that, I think, is one system. And the other way that we do it, obviously, is to check on the borrower's own so for example, the gender impact that we're having, because we're tracking these things on an annual basis and we're putting an action plan in place, we understand from our borrower whether they are improving in terms of, for example, women's participation as customers, employees, managers, board members. So I think there's a number of different exercises that we do. Some are standardized international toolkits, and some is our own action plans that we develop to monitor at the borrower level and then at the customer level. And we have, as I mentioned, our head of climate used to be our head of impact used to be the impact head at FinDev Canada. And so she has put in place a whole system that she could tell you much better than I can. But these are the kinds of things that we do.
Hi, my name is Shuya from Credit Saturn. Credit Saturn is a Japanese non-financial institution where I think we are operating the business in a pretty much similar geographical locations. And we are also like a private credit provider. So recently, so up to like recently, I mean, we have focused on financial inclusion. We haven't interacted with like a credit guarantee provider, but we are now stepping into like a climate space. So with that, that is a kind of new space for us. So with that, we are exploring training or working with like a credit guarantee provider like you guys. I wonder how is like a competitive landscape of that industry or like that space?
You're talking about climate in particular.
Credit guarantee provider
guarantee.
in general.
Credit guarantees, yeah. So we have been able to unlock 2 guarantees that help our senior lenders. Both of those are from the DFC, the US DFC. And so we are now exploring similar kind of guarantee programs from other development institutions. And I think it's definitely a very interesting instrument because we find that we have a lot of private capital excited about this and ready to do this, but with that extra protection. And it's a shortcut because then they can really just diligence the US, what is the value of a US government guarantee, or what is the value of a European government guarantee, as opposed to what is the value of microloans in Ghana. You know, it's just a much easier equation. So the competitive landscape is, for what we know, and Jean-Philippe will add, you know, I think it's really offered by development institutions today. There are, I think, more and more credit funds going to them. There's more guarantee programs emerging. I think it's a very promising, exciting instrument. And I know that in Japan, guarantees is something that is now possible as an instrument that you're looking at different projects, right? So, yeah.
Yes. So yes, mostly development finance institutions, probably realizing that if the new mission is to catalyze private sector money, it's probably also very efficient to use the guarantee, right? Because the probability of losing that guarantee is minimal. So the leverage, the multiplier effect of 10 million in cash or 10 million in guarantee over time, the efficiency of the guarantee is much higher, right? And as Gautam said, we have the private investors willing to come, provided to some extent there's a guarantee. And in Europe, in particular, I think the European Union is making big strides and big programs for guaranteeing their development finance institutions that can then use that guarantee to further guarantee, right? So that's the source of guarantees that we're looking at for the moment. I hope we answer your question.
Yeah, thank you so much. Sorry, I think it's time already, but I mean, one follow-up question. I mean, yeah, then what's the difference? Like, what's a competitive advantage compared to like a DFIs? What's your like a competitive advantage? Yeah.
What is our advantage versus a DFI? You know, all of the borrowers that we have, none of them have direct capital from DFIs because we started with them at an earlier stage. And once they grow to a certain point, they become potential borrowers for a DFI. But mostly the DFIs that we have been working with or have relationships with do not do a lot of direct investment in the kinds of companies we do. So we are, I would say, a more hands-on, earlier stage, diversified, you know, partner for them who can source capital and guarantees from the DFIs and work with these companies. Jean-Philippe?
I think there's another couple of points additional. We're probably much faster, much more flexible. We can tailor the financing to the needs of the borrower. We can deliver fast. We have the technology aspect that we discussed a long time that can be applied. Yeah, and then we can start small and hopefully, you know, grow. I remember conversations with development finance institutions telling us that actually, you remember what I presented, the idea of the repeat borrowers? Oh, that's interesting, right? Because now your borrowers are taking $20-25 million per loan. That becomes interesting to us. Anything that's below, well, maybe not, because it's a lot of work, it's et cetera, et cetera. So I think we are equipped to deal with the the early borrowers, but we want to continue growing with them. There's no reason why we should graduate them to somebody else. Now, if DFIs want to invest in our portfolios or guarantee our portfolios, that's a different story, right? So I think we are quite competitive in the market.
You guys are real like catalytic player, I think, in the space. Yeah, thanks so much.
Thank you so much. I think time is up. So again, could you please thank the Jean-Philippe and Gautam-san for coming all the way to Japan and for this presentation. Thank you so much.